South Africa's mining industry looks to get back into shape amid higher commodity prices and having restructured and formed slimmer businesses. Companies like Kumba Iron Ore are now taking advantage of this by recording a more than 70% rise in revenue and dividends, while first half earnings jumped 239%. Our markets anchor Arabile Gumede spoke to Kumba CEO Themba Mkhwanazi on the numbers.
Mr. Mkhwanazi, thank you so much for the time. Really appreciate it. I suppose we can start off by just chatting about how you were able to, get into an interim period with such great results.
Thanks, Arabile. It is a great set of results. We're extremely pleased. Clearly, the market fundamentals were very much in our favor. We saw significant increases in the iron ore price. Coupled with that was the performance of Transnet in terms of the logistical chain. That then allowed us then to fully benefit from those positives, given the fact that whilst we had production challenges, we still had stock, so we were able to sell and we were able to deliver these phenomenal numbers.
Are you worried at all that it may not be sustainable with regards to the iron ore price perhaps not staying as high as this? Perhaps, the longevity with regards to that, have you perhaps put in some sort of mechanisms or safe holds if this sort of thing wasn't to be sustainable?
Look, we are on a journey, and that journey is to improve our margins by about $10 a ton. So it's to ensure that despite what happens in the market, we're able to sustain a positive cash flow in terms of the business. Having said that, though, our view is that for the first half, we averaged around about a $90 per ton in terms of the index price. Our view is quite bullish that that's likely to be $95 to $100 per ton. If we continue to see the performance in terms of the rail network and we are able to claw back lost ground on our production performance, we are looking at quite a favorable second half of the year.
With regards to the market, one of the elements that you're definitely in charge of is the cost margin that you're speaking of with regards to the margin. Are you looking at other ways to try and bring that margin sort of lower, if I can call it that? Or, well, the margin itself will go higher, but I mean in terms of costs, are you looking at ways to bring those down a little bit further?
We are. We have a strategy that focuses on largely three elements. One is how do we improve our productivities, and again we're up to about 67%, up from about 63%. The other aspect is around cost. We have a target of 700 million rands this year. We've already delivered 460. And then the third one is how do we leverage of our second to none products, because that's the differentiator for us, the premiums that we get for our products. And again, we delivered a realized price of $108 per ton, which was probably $20 above where the rest of our peers are.
How long can Sishen sort of go on this mammoth run for, if we can call it that?
Well, the Sishen has a life of mine of 14 years. Clearly, we have worked to extend the lives of our mines. As we continue to improve what's within our control, we will be able to fully leverage off positive markets. Clearly, markets are very positive at the moment, but as I say, our focus is to ensure that we remain cash flow positive throughout the cycle.
And then the hope then in more than 30 Rand dividend as well to investors. The sentiment around doing something like that, is it part of a policy? Is that just rewarding investors who have been there as well for the long haul?
Our dividend policy says that we will reward our shareholders, in terms of a payout ratio of 50 to 75%. It then says, having then taken into consideration, elements around, what we deem as capital that we need to spend to invest back into the business, what's left of the discretionary spend, which also takes into account a safety net or a buffer, we will return the excess cash, just like we have done here in terms of a top-up dividend.
Which makes it a total of around 90% of...
It's about 98% of earnings for the...
Clearly sustainability of that, though not necessarily in plan, would be dependent then on what is attained from here on.
Yeah, look, it's a significant figure. The dividend that we've paid in this first half is probably equivalent to the total dividend that we've paid over the last 2 arrears per annum. So it is quite a substantial, but it is very reflective of a strong market.
Yeah. From here on in, the remainder of the year, are you maintaining your forecasts, changing them by any way, and then moving into the future? Any planned sort of changes with regards to the business in how it currently sits?
Yeah, look, I think by and large, in terms of guidance, we've obviously trimmed down a bit in terms of production. And again, we're being conservative. We're still maintaining our sales guidance to be between 43 and 44 million tons. The work around delivering on our strategy, becoming maintaining to be a fatality-free business, the work around the margin enhancement, the extension of the life of mines, and being an employer of choice, that we're very focused on that and continuing that.
Yeah. You did lose just a touch with regards to the total production. Are you worried about that at all? Is that something you can perhaps ramp up at a later stage?
We are working very hard to close the gap. We had a challenging start of the year, particularly in the first quarter. But again, we have recovery plans, and we've already seen a step up in terms of performance from the first quarter to the second quarter. So we're quite confident that we'll claw back the shortfall.
Mr. Mkhwanazi, thank you so much for the time. Appreciate it.
Thank you, Arabile.
All right.
Thanks for joining us on Point. Goodbye from me. With the details up next.